What's going on, guys? We have got a very red day. Risk on is selling off. These tariffs are shaking up the market, but it's not just bad news. We do have some good news in terms of jobs data. Private companies added 155,000 jobs in March, which is more than expected. Job numbers from February was upwardly revised to 84,000 jobs. And this read from March that we got was expected to be 120,000. We had 155,000 jobs added. And the overall numbers signal a solid labor market. Recent data shows that the level of open positions is now almost even with the amount of available workers, which reversed a trend where job openings outnumbered the amount of employees available, if you guys remember a few years ago. But we have something else to look out for. The BLS report, or the Bureau of Labor Statistics, which unlike ADP includes government jobs, and it's expected to show payroll growth of 140,000 in March, which is down slightly from 151,000 in February. We're definitely seeing a run to safety. Crypto selling off, risk-on stocks are selling off. The safe, boring stocks tend to be green today, the PGs, the Cokes. Now, how is crypto going to be affected by these tariffs? Well, as said by Matthews Kara, CEO of crypto payment platform RE10, said investors shouldn't worry about tariffs. Markets were waiting for certainty, and now they have it. The real danger was the unknown, not the tariffs themselves. This was written today. This was possibly written before this sell-off. If the real danger is the unknown, then why are we still selling off after tariffs have been announced? Kara goes on to say, as investors recalibrate risk, they may increasingly ditch high volatility assets in favor of safer bets such as US bonds, dollar holdings, avoiding risk on. Arthur Hayes points out that the tariffs that drive this strategy might also cause a problem down the road. And I quote, the impact for treasuries is that without dollar exports, foreigners can't buy bonds. And speaking of bonds, bond traders ramped up bets on interest rate cuts from the Fed. Markets are now pricing in a 50% chance of the Fed delivering 4 quarter-point cuts this year. 10-year yields declined to the lowest level since October. Traders also expect more cuts from the European Central Bank and the Bank of England, boosting the chances that both will deliver 3 more rate cuts this year. As said by Bob Michel, global head of fixed income at JP Morgan, it looks like we're cruising to recession now unless things change. And looking at rates, they definitely have changed. The market's basically got a 1 in 5 chance for a cut in May, pretty unlikely. Looking at June, we are expecting that first rate cut. And like was mentioned, the expected rate cuts by the end of the year is now tallying up to 4. Here's where we are. And here's the most likely scenario at this point in time. Now, I do want to talk about Iren stock. They just gave a mining update. I'm also looking out for the other Bitcoin miners for their updates. But we have something interesting mentioned for a first time from Iren. Iren will pause all further Bitcoin mining expansion upon completion of its 52 exahash build out. Why? Well, this shift reflects a reallocation of capital, continued management focus towards AI data centers and cloud, while continuing to leverage strong cash flows generated by the Bitcoin mining side of things. So basically, they're going all in on AI, utilizing their current Bitcoin mining and their plans of growth basically completely towards AI at this point. But they plan to reinvest all mining cash flows to support growth of their AI cloud service and AI data center businesses. Speaking of their cloud services, they currently have 1,896 GPUs, including H100s and H200s. Their GPUs are generating an annualized run rate revenue of 26 million. They've been seeing increased engagement in terms of their AI cloud infrastructure opportunities. Now, looking at Iren's chart, we broke this trend that we were following since the start of this cycle. When Iren was $1, we finally broke this trend back in late February, and we've been facing this descending resistance. If this descending resistance plays out anything like our pasts, we will get a nice pop. We've seen these descending resistances, then we go on to rally again, hopefully again. Iren is expecting a nice growth in revenue to the tune of about $50 million from their last quarter and $150 million from a year ago. They're also expecting a profit, and last quarter we did see a profit as well. If any Bitcoin miner reaches profitability this quarter, it would be Iren. They are the most efficient Bitcoin miner. Their joules per terahash, which is basically their cost to mine, is well under any other publicly traded Bitcoin miner. The fact that they are wanting to branch more into AI and less into Bitcoin mining, they're basically stopping once they reach their growth plans. I think we will see that change at some point. But where most of the Bitcoin miners are concerned, if you're looking for an entry, it's probably a good idea to wait, see if we can actually hold up our lows. If we keep creating new lower lows, you're basically in no man's land. One thing I'm watching for Iren is a break of this descending resistance and setting a higher high. For Iren to do that, it has to break this descending resistance first. It might break it and then find resistance at 775. We might continue to pull back and break under 575 if we don't hold it. One thing that's a positive for Iren is we are basically filling out this falling wedge, which is a bullish pattern, and also we have a bullish divergence. This is on the daily, a bullish divergence where the RSI has begun rising while Iren continues to fall. In the end, the Bitcoin miners depend on Bitcoin to recover. If Bitcoin recovers, I think there's a good chance we see a very bullish breakout for Iren, a break of this descending trend. This falling wedge pattern playing out. But right now the Bitcoin miners are looking pretty ugly. We have some death crosses. Many Bitcoin miners have been continuing to fall under the 50 MA, under the 200 MA. Keep finding them as resistance. And what have we been seeing from Bitcoin? Well, the other day Bitcoin tried to break out of this descending trend. It was a false breakout. It basically got caught right at the 50 MA, fell right back down, fell right back under the 200. We are looking so close to a death cross. I bet you can almost taste it. Bitcoin still needs to break this descending trend. It just keeps finding it as resistance with occasional false breakouts. At this point, Bitcoin is still following its ascending trend from the beginning of the cycle. We are approaching it now. We need to get a bounce here. If we sell off, we're likely to test our lower low here, this 77.5. We're approaching an important point. We're either going to break this ascending trend or we're going to break our descending resistance. It's one or the other. And only the market will decide for us. We definitely have some worrying data on the horizon. The Atlanta Fed's projecting a very negative GDP to the tune of a negative 3.7%, which was revised downwards, keeps getting revised downwards. Luckily, we saw some pretty positive data from the jobs, but BLS labor data is going to be very important to see, and that one includes government jobs. That one might be the one that we see take a big hit on. If the economy keeps getting worse, if we get rate cuts because of unemployment and not because of inflation coming down to the Fed's target, that soft landing narrative continues to get shaken up. If we get a recession, this is a fantastic buying opportunity to buy the stocks you love for the long term. These are great opportunities to buy the assets you love for the long term. And we've never seen Bitcoin in a recession necessarily. Do you think it holds up in a recession? Do you think it falls in a recession? Do you think it's treated as a digital gold? Or do you think it's treated like risk on? I would expect it would be more the latter than the former. But always interested in your guys' opinions down below. Do you think we can avoid a recession, or do you think it's basically 100% at this point? And how are you feeling about Iren's mining update? I have a feeling they'll change their tune at different points in Bitcoin's cycle. But lately the miners have definitely been feeling the pressure on the Bitcoin side of things. Many have been focusing more and more on AI, and that'll probably remain the trend that we see for a while. But let me know how you guys are feeling today. Are you holding up strong? Are you selling everything here and throwing in the towel? And what do you think about Bitcoin? Are we going to hold up our trend that we've been following since the beginning of this cycle and therefore break this descending resistance, or are we going to break this trend that we've been following since the start of this cycle? I do think we'll see a reaction to either, and only time will tell. But thanks as always for watching, guys, and I'll see you on the next one.